Hi, I'm Doug Jones with Mortgage Magic and Buyers Realty. I've been in the credit industry since 1968. I've been a lender since 1968. And you know, it's interesting because I'm going to talk about how to improve your score, but I want to tell you a little bit about the history. When I came into credit, we would have a person in our office pick up the telephone and call the credit bureau, and we'd write the report out on a piece of paper. And then, and I can remember running a big office. I remember a young lady that I hired. She'd come in at 8 o'clock. She would call. She would write until noon. She'd go to lunch. Then she'd call again with all the credit reports. It took a person writing all day long. Then we got what I call the ticker tape machine. It was this little machine. We'd type the information in for the credit report, and it would start printing out, and it'd print out these ticker tapes. We have these little dots all over the office, and it was really loud. So we put that in the back part of the office. So we'd put all our credit reports in the morning and just walk away and let it run, and then pull them out later and read them. And then it came to where we could put it on a computer. And I remember even at Mortgage Magic, we had one computer designated for credit, and if you wanted to run a credit report on Saturday or Sunday, you had to come down to the office, run it on that computer, and you could get a credit report. Well, now credit reports are on the internet, and they're easy, and people can probably get them on your telephone even. But I'm going to talk about credit because a lot of times we get people apply for a loan. They'll have a low score. Sometimes the low score is wrong. Sometimes it's something that can be fixed really easy, but we can't get them the rate they want until we improve that score. So I want to talk about the credit score a little bit and how to improve it. And first, I'll say this: you can get a free credit report at annualcreditreport.com. And there are three major credit granting agencies: the TransUnion, Equifax, and Experian. And you can get a free report from each of those every year. So I recommend, if you want to do this, get one the first quarter, then one the second quarter, then one later on in the year. So you can get one about every 4 months. So anyway, we get an application, and many times we get a customer. I had a customer with a 618 score. It was a FHA loan. He needed just a 620 to get a much better interest rate. Well, so we had to raise the score, and we do things called what if. We have a computer program, and we'll go right into the program, and we can take this balance, pay it off, take this balance, pay it down, take this and group them together, and we'll get a new credit score. And anyway, we happened to raise that customer's score by 100 points. So he got a really good rate. Now, we're not a credit granting company, we're a mortgage company. So I can only run credit reports for people who are applying for mortgages, okay? But what goes into your credit score? Paying on time is 35%. It's very, very important to pay on time. And that's one of the things I'm going to say is pay on time and then get rid of small accounts. I'll go right down here, small balances, because a lot of times people forget to pay a $10 payment, and it goes on the credit score as a 30-day late, and you can't believe that can affect your rate by 50 to 100 points on a $50 balance account. So I'm going to say pay on time is 35%. Make sure you pay on time a little bit early if you can. Pay on the internet, pay online is a lot better than trusting the mail. Keep your balances below 30% is going to give you a ultimate score. It's going to give you a higher score. And here it says pay off small account balances, but do not pay off old debt. Even when we get a customer who's got a lot of bad old credit, we don't recommend they pay it off until we do our what if scenario. Because we've had customers in good intentions have a really bad old credit. They get excited, they got money, they pay it off, bingo, their credit score went down. Because that old account had establishes some of the factors in having the 15% of the credit report is based on the time of these accounts. So all of a sudden you got rid of that old account and become a new account because you paid off recently, and that hurts your credit score. And so I say pay on time, keep your balances below 30%, get rid of small account balances, and do not pay off old debt. Okay, don't pay it off. Just leave it on there for a while. And if you apply for a mortgage or talk to a credit company, giving you a credit card or any type of thing, a car loan, then maybe they can help you and determine the best way there. So anyway, I know I rambled a bit because I get excited about this. I've done this since 1968. And I can remember being in Gilroy, California once, and I was a relief manager of this finance company, and I got an application. I went to the front desk and I told the lady who pulled the credit reports, here, get a report on so-and-so. And she calls her cousin at the credit bureau, and her cousin says, oh yeah, he's really good. So, believe it or not, that was a credit report back in 1968. I'm Doug Jones. If we can ever help you, give us a call, and click on our videos. If you like our videos, click and subscribe, because we're going to have a lot of videos on credit, on mortgages, on just all kinds of things having to do with mortgage, credit, insurance on the mortgages, everything to do with real estate and loans. So I'm Doug Jones, and hope you like our video. Thanks.